Imagine waking up and seeing the headline, Coinbase going offline on the same day the XRP ETF decision was expected. You'd probably blink twice, rub your eyes, and ask, wait, what? Because that's exactly what happened. The very same day that was marked on every XRP holder's calendar, the day the SEC was supposed to decide the fate of the long-awaited XRP ETF Coinbase, one of the biggest exchanges in the world, suddenly announced a 4-hour outage. 4 whole hours of downtime, right when every trader expected fireworks. Now tell me, does that sound like a coincidence to you or something else entirely? Hey everyone, welcome back to Journey to XRP, the channel where we uncover what's really happening behind the crypto headlines and decode the hidden signals shaping the XRP story. If you've been with me for a while, you know this space moves fast, sometimes too fast. But today's story isn't just about a random outage. It's about timing, power, and maybe, just maybe, preparation for something massive. Now, I'll be honest. When I first saw the post, I almost dropped my phone. I was doom scrolling through X like usual, catching up on all the XRP chatter, when a tweet by an analyst named Chart Nerd jumped out at me. In all caps, it screamed, XRP ETF decisions are due October 25th, and Coinbase will be down for 4 hours on the very same day. Coincidence? I think not. That one post blew up across the XRP community. You could practically feel the shockwaves. Comment after comment, people were either panicking, speculating, or joking that maybe Coinbase knew something. But here's the thing, in crypto, coincidences like this rarely go unnoticed. Timing matters. Every second, every announcement, every outage seems to happen for a reason, especially when billions of dollars could be in play. So, let's talk facts. Coinbase officially announced maintenance scheduled for October 25th at 7 a.m. Pacific time, lasting about 4 hours. During that window, trading, transfers, staking, even credit card transactions would all be paused. You could still log in, sure, but you couldn't actually do anything. And get this, their futures and derivatives platform would also overlap with an outage from 4 a.m. to 1 p.m. Pacific time. So that's nearly the entire morning wiped out. Now think about it. This isn't some small exchange pulling maintenance at midnight. This is Coinbase, the biggest regulated crypto exchange in the US, timing an outage right during prime trading hours. The exact window when an ETF announcement could have dropped. If you've been around this space long enough, you know what that means. If XRP's ETF had been approved that morning and Coinbase users couldn't buy or sell, the price could skyrocket while millions of traders were locked out. Imagine the chaos. XRP starts moving, news breaks across every platform, and Coinbase users can only watch the charts, powerless to act. It's the stuff of crypto nightmares. But the deeper I dug, the stranger it got. Because October 25th wasn't just any date. It was the culmination of months of anticipation. The day multiple XRP filings were expected to face SEC decisions. Firms like Grayscale, 21 Shares, Bitwise, CoinShares, and WisdomTree all had filings pending in the same week. The XRP community had practically circled that date in red. Everyone expected it to be a turning point, either the day XRP broke free into institutional legitimacy or got delayed again. And right on that same day, Coinbase, the very exchange that reopened XRP trading after Ripple's legal win, decides to shut down operations. The timing just didn't sit right with me. I couldn't shake the feeling that something deeper was going on. Maybe it was coincidence, maybe it was strategy, or maybe it was part of a much bigger plan that none of us were supposed to see yet. So in today's deep dive, I'm going to break it all down from why this outage raised so many red flags to how ETF timelines may have quietly shifted behind the scenes and what it could all mean for XRP's future. Because if you've been in crypto long enough, you know this truth. The biggest moves often happen in silence right before the noise begins. Stick with me because by the end of this, you'll see why October 25th might not have been a random date at all. It might have been the calm before the XRP storm. So, let's rewind for a second and really unpack what makes October 25th so important. Because it wasn't just some random day on the crypto calendar, it was supposed to be the day, the one the XRP community had been waiting for, the day the SEC was finally expected to make a call on whether to approve or deny a series of spot XRPF applications. These weren't small-time filings either. We're talking about Grayscale, 21 Shares, Bitwise, CoinShares, WisdomTree, and even Canary. Capital, all lining up for their chance to bring an XRP ETF to the US market. It was shaping up to be the kind of week that could have changed everything for XRP holders. Now here's what makes that timeline so strange. Each of these ETF filings had its own critical decision date throughout October. Grayscale's was around October 18th, 21 Shares was due on the 19th, Bitwise around the 22nd, and WisdomTree's on the 24th. So by the time we hit October 25th, the expectation was that the SEC would have given at least one verdict. Approve one, delay another, something. That week was the climax everyone had been building toward for months. But then, quietly and without much media coverage, something changed. The SEC hit reset. And when I say reset, I mean they basically told all the ETF issuers to start over. According to industry reporter Eleanor Tarrett, the SEC reached out to each company and asked them to withdraw their old 19B4 exchange rule filings, the very ones that dictated those October deadlines, and then submit them through a different, more standardized route. Now, if you're not deep in ETF mechanics, that might sound like bureaucratic mumbo-jumbo, but here's the translation. Those anticipated October decision dates gone, vanished, completely invalidated. All that hype around the big week suddenly evaporated overnight. And that's when I had my first wait a minute moment. Because if the SEC really reset the process, then the XRP ETF decision technically couldn't even happen on October 25th, which begs the question, why did Coinbase still choose that exact date to go offline for maintenance? I'll admit, when I first pieced that together, my enthusiasm crashed. It felt like one of those classic crypto hype cycles. Everyone gets excited, Twitter goes wild, and then reality quietly deflates the balloon. I started thinking maybe this whole Coinbase outage conspiracy was just a case of bad timing, nothing more. Maybe the engineers at Coinbase just picked a random Thursday to patch their systems, and it just happened to overlap with what used to be a big date for XRP. But then the twist. Just as everyone was cooling off and moving on, something curious started happening behind the scenes. Those ETF issuers who were told to refile, they didn't just sit around twiddling their thumbs, they started quietly reserving ticker symbols, a move that usually happens right before an ETF launch, not months before. For instance, Grayscale reserved GXRP, Franklin Templeton locked in XRPZ, and Canary Capital grabbed XRPC. Now, that might not sound dramatic, but for anyone who follows ETF filings closely, that's a big tell. Reserving a ticker is like setting the table for dinner. You don't do it unless you're expecting guests soon. That was my aha moment, because even though the official decision date had been wiped off the board, these financial giants were acting like the green light could come anytime. The procedural reset might not have been a delay after all. It could have been a quiet acceleration under the radar. So maybe October 25th wasn't a dud date after all. Maybe it marked something else entirely, like a behind-the-scenes preparation day, the day exchanges like Coinbase started prepping their systems for what's coming next. And if you think about it, it makes sense. If the SEC gives the approval, suddenly these firms need everything: trading systems, liquidity pipelines, custodial setups to be rock solid and ready to go instantly. It's not confirmation of a conspiracy, but it sure doesn't look random anymore. Too many puzzle pieces are starting to fit. Coinbase's outage, ETF tickers popping up, and regulatory resets that look more like recalibrations. Something is moving, something big. Now that we've established how the timeline around XRPFS isn't as random as it first looked, let's talk about Coinbase's role in all of this, because this is where the story gets really interesting. The moment you realize how intertwined Coinbase is with XRP's ecosystem, that maintenance outage suddenly stops feeling like just another technical update. It starts to look a lot more like preparation. Let's start with something simple but crucial. Coinbase isn't just an exchange. It's an infrastructure hub for institutional money. When a major crypto ETF launches in the US, there's a high chance Coinbase custody is somewhere in the background, holding the actual crypto assets, managing security, or facilitating transactions between issuers and brokers. We saw this exact same setup when Bitcoin ETFs started taking shape. Coinbase became the go-to custodian because it's one of the few US regulated entities with the infrastructure to handle that kind of institutional flow. So, if an XRP spot ETF were to get approved, guess who's almost guaranteed to play a major role? You guessed it, Coinbase. Now imagine you're Coinbase's leadership team. You know, ETF approvals could drop any day now. You know that if XRP gets its green light, there's going to be a flood of money, institutions, retail traders, and whales all rushing in. Wouldn't you want your systems at 100% capacity before that happens? That's not conspiracy. That's just smart business. So, when they announce a 4-hour outage during prime trading hours, you have to wonder, are they patching something ordinary or are they quietly upgrading their back-end systems for massive incoming liquidity? Think of it as reinforcing the dam before the flood hits. Because if XRP's ETF launches, it won't be a trickle. It'll be a wave. Billions of dollars worth of demand hitting all at once. Now, to add even more fuel to this theory, let's remember that Coinbase and XRP already have history. After Ripple won its partial victory against the SEC, the ruling that said XRP itself isn't a security, Coinbase was one of the first major US exchanges to relist XRP. That move alone sent shockwaves through the market and gave Coinbase a front row seat in the XRP resurgence. If ETFs are the next step in legitimizing XRP for mainstream finance, it makes perfect sense for Coinbase to be part of that transition. And here's where things start to align just a little too perfectly. XRP's liquidity on US exchanges has been relatively thin compared to Bitcoin or Ethereum. But if an ETF launches, liquidity becomes critical. The ETF providers will need fast, reliable access to XRP for pricing, settlement, and redemption processes. Coinbase, as both an exchange and a custodian, would have to be ready to handle that volume with zero downtime. So, what better way to ensure readiness than to run a system-wide maintenance and test your infrastructure right before a potential event? It's also worth noting that this isn't the first time major maintenance has coincided with critical crypto news. If you've been following Bitcoin's ETF journey, you might recall that exchanges have often gone offline or slowed down right before major announcements. And later, it turned out they were upgrading for higher throughput. Some people called those coincidences too. So when we step back and look at the big picture, it paints a pretty compelling narrative. You've got ETF issuers quietly preparing tickers, the SEC resetting paperwork without actually canceling anything, and Coinbase, the same exchange that would likely be integral to any XRP ETF, going offline for a deep maintenance session on that exact day. Sure, maybe it's a coincidence, but crypto veterans know something. Markets move on whispers before they ever move on headlines. Preparations always happen in silence. And maybe, just maybe, this outage was Coinbase's way of making sure they're ready for a moment they already know is coming. Alright, now that we've connected the dots between Coinbase's outage and the ETF groundwork, let's talk about the one thing that's been quietly shaping all of this from behind the curtain, the US government shutdown. Because believe it or not, this seemingly unrelated political drama could be one of the biggest reasons why everything about XRP feels like it's in a strange state of pause right now. So, here's the situation. At the time of all this XRP ETF chatter, the US government was dealing with yet another partial shutdown. And when the government shuts down, the SEC, the same agency responsible for approving or denying crypto ETFs, operates at what's called limited capacity. That means skeleton crews, restricted communication, and tons of pending decisions that just sit in limbo until funding resumes. Now, on paper, that sounds like a bureaucratic inconvenience. But in crypto, timing is everything, because this shutdown meant that even if the SEC chair or commissioners wanted to approve an XRP ETF, they couldn't process the paperwork until the funding issue was fixed. The machine was on pause, not by choice, but by circumstance. But here's the part that got me thinking. What if this pause wasn't necessarily bad news? What if instead it was a strategic window, one giving exchanges, institutions, and ETF issuers a little extra time to prepare behind the scenes? Think about it. You've got ETF issuers updating their filings with new tickers. You've got Coinbase doing maintenance right around the same date the market expected an ETF verdict. And you've got the SEC temporarily frozen in place. That's like a perfect storm of quiet preparation. When you look at it that way, this isn't a coincidence. It's a reset window, a chance for everyone in the XRP ecosystem to get their systems aligned before the SEC resumes full operations. Now, it's easy to underestimate how synchronized the financial world can be when something big is brewing. For example, during Bitcoin's ETF rollout, insiders were moving months ahead of the news cycle, testing custodian systems, building liquidity pools, running mock trading scenarios, all before the official green light came down. When the approvals finally hit, it looked spontaneous, but it was anything but. Everything had been orchestrated quietly, under the radar. So, let's apply that same logic here. If XRP's ETF approval is imminent, and all signs suggest it's getting close, then what we're seeing now could be the behind-the-scenes build-up to something huge. Meanwhile, this downtime also exposed something important that a lot of traders don't think about until it's too late dependency. If your go-to exchange goes offline in the middle of breaking news, you're stuck. No buys, no sells, no exits. And that's exactly what would have happened if October 25th had turned into an XRP ETF decision day. Coinbase users would have been completely frozen watching the price chart move while they couldn't make a single trade. It's a painful reminder that in crypto you have to diversify your access points. Exchanges are not fail-proof. Maintenance overloads or even regulatory halts can take them offline without warning. That's why I always say have multiple accounts ready to go. It's not paranoia, it's preparedness. So, while the government shutdown might seem like a background issue, it's actually giving us a lesson in timing and readiness. Every delay in crypto has a dual purpose. It frustrates the impatient, but it rewards those who stay alert. And if you've been following this channel for a while, you already know what I believe. These quiet moments are where the groundwork for the next big move is laid. The shutdown may have slowed the SEC, but it hasn't slowed the market's momentum. If anything, it's giving major players more time to position themselves, perfectly before the real fireworks begin. Because once the government flips the switch back on, we might not just see a single XRPF approval, we might see a floodgate open. Now that we've unpacked how the shutdown created this strange calm before the storm, it's time to look ahead at what could actually happen once the switch flips back on. Because when the SEC comes back to full power, the market isn't just expecting one ETF decision, it's expecting a flood. And if XRP is part of that flood, the impact could be nothing short of explosive. Let's start with what happens the moment a spot ETF is approved. Unlike the futures ETFs that trade on paper contracts, a spot ETF must physically buy and hold the real asset. That means for every share that investors purchase, the fund managers known as authorized participants have to go out into the open market and buy the equivalent amount of XRP. Those tokens are then locked away in custodial vaults to back the ETF shares that trade on exchanges. So, picture this. If a spot XRP ETF launches, and just a few $1 billion flow into it within the first few weeks, which is a conservative estimate based on Bitcoin's history, that means billions of dollars worth of XRP will be bought up and removed from circulation. That's not hype, that's math. Every single dollar entering a spot ETF creates real demand. Now, combine that with what we already know. XRP's circulating supply on exchanges has been thinning for months. A lot of it is sitting in private wallets, escrow, or Ripple's reserves. Liquidity isn't what it used to be. So, if institutional demand suddenly spikes while supply is constrained, it creates a scenario we've only seen a few times in crypto history, a supply shock. We've seen what that looks like before. When the first spot Bitcoin ETFs went live in early 2024, within days, over 200,000 BTC were pulled off exchanges by fund issuers. Prices didn't just climb, they roared upward because the market had to reprick Bitcoin to reflect scarcity. Now imagine that kind of energy focused on XRP, a coin that has spent years being suppressed by regulatory battles and uncertainty. If the chains come off and ETFs open the door to mainstream money, the repricing could be swift, sharp, and possibly historic. And guess who stands to benefit most when that happens? Coinbase. As one of the most established US regulated exchanges and custodians, it would likely handle both ETF liquidity and institutional storage. That means massive trading volume, fee revenue, and attention, which once again makes their carefully timed maintenance window look more like a final systems check before the storm hits. But here's the part I think most people are missing. It's not just about price, it's about credibility. Once a regulated XRP ETF hits the market, XRP will officially step into a different league alongside Bitcoin and Ethereum as a fully recognized, institutionally accessible digital asset. That's the point where Wall Street stops treating XRP as a speculative altcoin and starts treating it as an investment-grade asset. Now, of course, we have to stay realistic. The SEC might still drag its feet, or the first ETF could be smaller than expected, but markets don't move only on approvals. They move on anticipation. The very moment traders, hedge funds, and brokers smell ETF approval in the air, they start accumulating. And that accumulation alone can create a mini rally long before the first ETF share ever trades. So what happens next? Simple. The government reopens, the SEC catches up on its backlog, and one morning, maybe without warning, the words we've been waiting for flash across headlines. SEC approves first spot XRPF. And at that exact moment, every piece of this puzzle, Coinbase's timing, the tickers, the silence, will suddenly make perfect sense. But before we talk about what's next, let's take a step back and breathe. Because this story, like every great crypto saga, isn't really about hype or headlines. It's about timing, positioning, and preparation. The people who win in this space aren't the ones chasing green candles. They're the ones who recognize when the silence is about to break. And right now, this silence is deafening. If you've been around crypto long enough, you've probably noticed that the biggest moves never happen when everyone's screaming to the moon. They happen when everyone's confused, distracted, or afraid to act. Think back to 2020 when markets were in chaos and Bitcoin quietly went from $5,000 to $60,000 before most retail investors even realized what was happening. The same setup might be forming here with XRP. Let's connect the final dots. We've got ETF issuers quietly locking in ticker names GXRP, XRPZ, XRPC, all ready to go. We've got the SEC's paperwork, stalled but not cancelled, hinting that approvals are pending, not denied. We've got Coinbase, arguably XRP's biggest institutional gateway, going offline right when everyone's watching the clock for ETF decisions. And on top of that, we've got a broader market that's stabilizing after one of the most volatile years in crypto history. When you zoom out, all those random pieces start fitting together like a master plan. Because when the lights come back on, when the SEC resumes operations and the next wave of ETFs gets reviewed, the first movers are going to be ready. And I don't mean ready to react. I mean ready to dominate. So where does that leave you? The individual investor? This is the part that matters most. The truth is, you don't need to predict the exact moment of an ETF approval or guess the next XRP price target. What you do need is a plan because the worst position to be in when the next big move happens, whether it's an XRP breakout or a broader crypto rally, is unprepared. For starters, make sure you have multiple exchange accounts verified and tested. If Coinbase goes down again or traffic spikes, you don't want to be staring at a frozen screen while XRP rockets upward. Have backups like Kraken Bitget, LBank, or Blowfin ready. Keep small amounts of crypto in hot wallets for quick trades and secure the rest offline in cold storage. The people who can move fastest in those first few hours will be the ones who benefit the most. Next, stay informed but filter the noise. Not every tweet or rumor is truth, and in moments like this, misinformation spreads fast. Follow credible sources. Join communities that discuss facts, not fantasies, and keep your own research sharp. That's exactly why I created this channel, Journey to XRP, to help people navigate moments like these with insight, logic, and a calm mindset. Finally, and maybe most importantly, be patient but alert. These kinds of setups don't happen every month or even every year. Sometimes the market tests your conviction before rewarding it. Sometimes it gives you one clear window, not 1 week, one announcement, one breakout to change your entire position. You don't want to be asleep when that happens, because when history looks back on XRP's story, from court battles to ETF approval to global adoption, this moment right now, this quiet, uncertain, tense calm, will be the chapter just before everything changed. So stay sharp, keep your eyes open, prepare your accounts, your strategy, and your mindset, because the next few weeks might just decide the next few years for XRP. And you'll want to say you were ready when it happened. This is Journey to XRP, and as always, stay safe, stay informed, and stay ahead of the game.